please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair, and it's turning out to be a session where we are seeing the mid-cap index outperform a marginal bit as compared to the Nifty and the Sensex. The Nifty and the Sensex just about whiling away time and consolidating after the move that we saw yesterday. So the Nifty just about at 11,434, and we have the Sensex which is down around 41 points as well. We do have a couple of stocks which continue to be in focus. So what stands out is the kind of follow-on buying that we're seeing in Axis Bank. That stock is up around 1.8%, so good going for that one. Sun Pharma, which is up around 1% odd. Obviously, it is the rupee depreciation plus maybe some amount of buying after the fall that we've seen in the recent couple of sessions. And Infosys also, which is up around 1.5% at this point in time. Again, that whole rupee depreciation thesis playing out on a couple of these stocks. Lots to discuss over the next 1 hour. Hi, Prashant.
Ekta, hi. I just was looking at the Nifty, Sensex, the big indices, and how far they've come off from the all-time highs, which is essentially pretty recent, right? I mean, because it looks like so much has happened and so much damage has been done, but look at the change. I mean, the Nifty is down about 3% odd, under 3% or so from the highs. The Nifty Bank is down about 4%. Mid caps, small caps, they were never ever sort of coming close to reclaiming their highs. There was a little bit of a bounce, meaningful in the case of the mid cap index, and some of that bounce has been given back again. So it just puts things in perspective that, I mean, the Nifty, for all the hue and cry and drama, is down 3% from its highs, and the Nifty Bank is down just about 4% or so. So when you look at those numbers, I mean, you start to wonder whether one should start to anticipate a big bounce or anything of that sort already. Sure, I mean, the Nifty is down 300 points in the last few days, and markets don't go in one direction, in a continuous fashion day after day. There are bounces, and maybe we should expect that. But should you really start to expect a big one, which will take out, some of the earlier levels higher? I think it gives one pause for wonder. So we'll keep track of that, but I just thought we'll start with that simple graphic which tracks the index movements from their respective highs. Sudarshan Sikhani of S2 Analytics is with us. Sudarshan, thanks very much. Morning, appreciate it. Your sense in terms of how we are trading, it's largely quiet as compared to where we were yesterday, be it on the currency, be it in the stock market. It's quieter. Your sense?
Yes, good morning again. See, the Nifty is now trading almost close to a strong support level of 11,400. That support is holding for the time being, and it could easily hold because we also saw 11,600 resistance hold. So the trade here is to go and buy the Nifty at current levels and anticipate a rally towards the earlier resistance of 11,600. So there is enough margin to make it tradable and worthwhile. A much more interesting trade is now coming in the Nifty Bank, which is outperforming since yesterday afternoon. So buy the Nifty Bank and the Nifty, and at least for tomorrow, from today till tomorrow afternoon, and then see what happens.
Okay, stocks then, Sudarshan?
Well, pharma continues to be my favorite sector. So for today, I have Piramal Enterprises, PEL, where buying is suggested. PEL has come in all good quality pharma companies have been coming in this list, in this show consistently. PEL is a buy not just for the day, it's also a position trading idea. I also have Axis Bank as a buying opportunity. I did explain that the banks should outperform, and Axis and ICICI Bank should outperform in the banks. So Axis Bank is a buy. One short sell is Cholamandalam Finance. I'm downbeat on NBFCs. I think NBFCs have much more downside. So this is a short sell. Axis and PEL are buys.
Okay. All right. Sudarshan, just hold that thought. We have some exclusive information which is in fact coming in or it is a stock alert with regards to Dredging Corp, where the cabinet may consider selling government stake. So this is sources to CNBC Awaaz, which is coming through. So we'll try and get you more details on this particular story. But as you can see, Dredging Corp is excited on the back of that news, in fact, spiking up to the high point of the day, up around 10-odd%. But we have a couple of Twitter queries for you, Sudarshan. So let's get that. Sandeep has 30 shares of Amara Raja batteries at 803. Wants to know whether to hold or sell.
I think you should hold on. The worst is over for Amara batteries. Now markets are choppy and the stock is also choppy. That's a different issue. But I would expect that the lows have been made and we could see a rally all the way to 890. I can't tell you when that will happen, but it should happen slowly and steadily. And you should hold on and wait for the levels I have just said.
All right, Sudarshan, thanks very much. We speak again. I mean, the Nifty is blinking red and green, point higher, sometimes a couple of points lower, but 11,438 is where the index is at. Let's get some F&O trades. Shubham Agarwal is with us, and he's going to put out what he's making of things. Shubham, morning. What would you trade?
Good morning, Prashant. The first trade would be on the index, Bank Nifty. So if we look at Bank Nifty, now fresh option writing is happening around the level of 27,200 to 300, which is indicating that this seems to be a support in Bank Nifty. And we have also seen multiple shadows getting formed on the index, which indicates that there should be a pullback. So the strategy would be to execute a ratio call spread, and the trade would be to buy a 27,400 call option 1 lot, and sell 27,600 call option 2 lots for the weekly expiry. The current spread is at 26. The target would be 100 and a stop loss should be kept at 5 rupees. The second strategy is a bullish strategy on Tata Motors, because that has been relatively outperforming, and we believe that the breakout that we have seen a couple of days back should get extended. So the strategy is a bull call spread, where we have to buy a 280 call option and sell a 300 call option. The current spread is at 5 rupees. The target would be 12 and a stop loss of 1 rupee. And last strategy would be a bearish strategy on McDowell's. We have seen that McDowell is in a declining channel, and the continuation pattern again suggests that there should be further correction in McDowell's. So a bear put spread is recommended at the current level. The trade would be to buy a 580 put option and sell a 560 put option. The spread right now is 6 rupees. The target would be 14 and a stop loss of 2 rupees.
Okay, all right, Shubham, we're going to let you go on that note. Thanks very much for joining in and talking to us. So that's the view coming in terms of a couple of F&O strategies. Well, for the Nifty, it's absolutely flat. We have the mid-cap index, which is marginally outperforming at this point in time. Let's get in some opinion then. Earlier today, we spoke with Gautam Chachoria, MD and head of research at UBS Securities, who says he has not seen any big sell-off in emerging market funds yet, and also adds that the risk-reward is not attractive in the market. Listen in.
Downside for US, European equities could be meaningful. For Asia, equities is generally now getting priced in. And India specifically has outperformed a lot in the context of this outlook, also because of the strong local flows. So fundamental wise, the India long-term story obviously remains intact. So there's no reason to argue that India will necessarily have a bear market over the next 2-3 years. But having said that, the current level of valuations don't leave much room for error or any such risk-based sell-off. We haven't seen any big sell-off or redemptions in emerging market funds yet, despite the pressure points we have seen over the last couple of months. Portfolio perspective, if you're taking a 6-month, 1-year view, the risk reward is unattractive, and therefore we see more downside for the market than upside, both for mid caps as a whole and for broader markets. And any portfolio positioning has to be keeping that in mind. So our portfolio positioning is overweight IT services, overweight private banks, including the corporate lenders, underweight industrials, infrastructure, and mid caps.
Okay, Gautam there from UBS. The rupee weakness is the big story. It's benefiting IT companies. It's benefiting pharmaceutical companies. We got you opinion from one large IT company earlier on Bazaar today, Tech Mahindra. We've got a smaller IT company which is now joining us. Vishnu R. Dursad is Managing Director and CEO of Nuclear Software. Is joining us right now on the phone line. Thanks very much, sir. Appreciate you joining in. Just briefly, I mean, what is your assessment of things? How will this big, sharp depreciation we've seen in the rupee affect IT companies, you specifically, will you get to keep some of this in terms of export realizations?
Certainly, we would be able to benefit for the time being at least. But as such, we look at things in a long-term manner. And there, these things really do not, the benefits do not stay on for forever. They do get matched out.
So, have your negotiations with your vendors started in terms of, say, renegotiation of contracts?
Thankfully, our prices are, quoted in US dollars or the foreign currency only. So, there is no need for any renegotiation on discount. Our pricing is value-based pricing. It has nothing to do with, the cost, really.
No, so existing orders which you're executing, on that you will be able to sort of gain on translation, right, Mr. Dusant?
Certainly.
Right. So what is the quantum of that? I understand it's one term. It's not for you. No one will be able to keep these gains forever. But what is the one-time gain that you're looking at?
No, I won't be able to comment on that. Or our CFO might be looking at it. But again, I'll repeat this. We do not look at them as something ongoing. That's just a one-time.
What percentage of your inflows are hedged at this point?
50% of our inflows are hedged, typically. That's our policy. The board has decided that policy, and that's the way we look at it.
And at what rate, sir?
Again, I would not be able to comment on it right now, but maybe average of 69-70.
Okay. You've seen a good amount of an improvement in your margins. Last quarter, for example, was almost 17%, or maybe 16.5% to be fair. What is your sense in terms of where the margins could head based on the kind of incremental benefit we could see from the rupee depreciation?
Okay, that's something I would rather not answer that question, because we do not give guidance.
Okay.
And
All right, Mr. Dusant, thank you very much. We'll leave it there. Appreciate you joining in with that quick commentary. So that is nucleus. There will be an impact, but Mr. Dusant not being able to quantify. Maybe we'll get in touch with the CFO as he suggested. Power NPA case at the bottom of the screen. The Supreme Court is transferring all pleas filed in different high courts to itself. So it will hear all the cases which are in front of different high courts around the country. So that is the latest which is coming through there at this point in time. Okay, the other piece of news was Siam, where they're commenting on what really influenced the monthly data, and I saw some impact because of floods, etc. So, but that's largely known, nothing new there. We heard that from individual companies.
I think that was also factored into the previous month's auto sales as well. Yes. We saw a little bit of an impact.
No, I think they're talking about the last month right now, because the consolidated industry data comes with a bit of a lag. All right, Shrey Equipment Finance is the other company which is in focus. They received SEBI not to go ahead with an IPO for one of their businesses. Let's go across to Abhishek Kothari, who's in conversation with the management.
Well, Shrey Equipment Finance has received the note from SEBI last evening regarding its maiden IPO that the company plans to come out. We have Mr. Devendra Kumar Vyas, the CEO of the company. Good morning and welcome to CNBC, sir. Could you please highlight for our viewers what is the exact business of Shrey Equipment?
Shrey Equipment Finance Limited is into the financing of in construction and mining equipment, IT equipment, which is hardware, software, financing of that, healthcare equipment, and the farming equipment. So we are there in all these four sectors today, and we have approximately market share of 33% approx in the construction mining equipment, which means every third piece of equipment is financed by us in the country today.
Could you give us the breakup of the total IPO that you planned in terms of how much is the offer for sale and how much is the fresh issuance that you are looking for?
I think we are looking at, as per our DRHP, which we have filed, around 1,100 crore. We are looking at fresh equity in the company, Shrey Equipment Finance Limited. And our holding company, Shrey Infrastructure, they are expecting to dilute up to 43 lakh from 86 odd thousand shares to the investors.
to come, I mean, the offer for sale is there from Shrey Infra, but 2 days back, we had the management of Shrey Infra who categorically mentioned that Shrey Infra is not looking to grow the book much. So why is there a need of capitalizing them, or why is there a need for offer for sale and, putting money over there?
See, Shrey Infrastructure has made a lot of strategic investment. If you see the business model of Shrey Infrastructure, they have grown the asset book as well as investment book. So they made a strategic investment, and they have been monetizing these investment. If you see, Viom was the one, then they did the road assets, now the equipment. So I think that's a good model to really keep investing, keep making strategic investment, and keep monetizing to improve the return on equity for the investors.
You spoke about return on equity. Currently, what is the ROE of Shrey Equipment? As far as my calculation goes, it is in single digits if you take into consideration the ROE for the last few years. Am I right or am I wrong?
No, maybe Shrey Equipment ROE today for the June quarter, which we have declared the results, is around 15.7% as per India's accounts. And if you see the March, it was double digit, around 11% for as per IGAP accounts also. So it is not in single digit.
Okay. Sir, what is the balance book that will be left in Shrey Infra? Since equipment will be listed, how much in the consolidation portfolio does Shrey Equipment forms?
See, today, if you look at Shrey Equipment Finance is already a separate entity. The equipment financing business has been happening in Shrey Equipment only. The Shrey Equipment Finance Limited asset under management is a little more than 31,000 crore rupees. And that gets consolidated because we are the 100% subsidiary of Shrey Infrastructure Finance Limited today. It gets completely consolidated into Shrey Infra book.
Change in the Nifty, so it's a pretty quiet kind of a day, as I was mentioning earlier. What's happening in oil and metals? Let's bring in Manisha, who's got exactly that. Manisha, morning.
Morning, Prashant. Thank you so much for that. Well, you have seen the crude oil prices actually trading steady. Markets are awaiting the US weekly inventory data. But what has seen a definite decline really is the metal space, because the US dollar has strengthened yet again. And you also have seen, the markets watching out for the US-China concerns, trade deficit, rather the trade tariff concerns there, because what the US has been saying, China says that they would retaliate on that. So this is one thing that doesn't seem to be getting done. The uncertainty coming in from this one is weighing on the metal prices. Apart from that, it also has to do with the China imports data, where you have seen the metal imports decline, especially copper, on a month-on-month basis, and that's weighing onto that space as well. Joining us to talk more about that now is Mark To. Mark, hi. Thank you so much for taking time out for us. What is your sense about the US-China trade concerns? If it does take to another level, how much of an impact would we actually see on ground metal demand?
For the trade war concerns, we are going to see, as you say, we are going to see the next level impact. Basically, we can see that the negotiations are still in place, but it is just behind the curtain. Everybody is now calculating on whether they can make friends or enemies to each other. And I think for different countries, they have to renegotiate the trade pacts or the trade unions like they have never seen before. So whether it is EU or for Mexico, for Canada, for US, or even for China, I think it is somehow rather chaotic at this level.
Mark, while of course it is chaotic, but as a smart investor, would you see it as a renegotiation between various countries, or do you see an actual demand impact coming in?
Well, I think some kind of reservation do exist, because we can see that after the non-farm payrolls data release, it is really strong, much stronger than the expected numbers. But the US dollar doesn't have the significant upward movement. Rather, we can see that the gold price did have some kind of rebound. So I tend to think that the investors actually are going to price in the trade war concerns, the uncertainties, all these related issues for the benefit of doubt.
So, Mark, what's your sense on the US dollar? Your point is well taken when you say even as a stronger data and the safe haven buying that we have seen for much part of this year has supported US dollar, we haven't seen further highs really come in. It has been trading in a very narrow range. Is that how you foresee it going forward from here?
I think for the coming few days, we are going to have more and more central bank actions. And I think, of course, for September, the FOMC, basically it is already written on the wall. We all expect that an interest rate hike is highly likely in September, but we're going to listen to what the central bankers are going to say. At this moment, I think for gold price, 1180 should be the immediate support level, because it should be rather hard for them, because the selling pressures after all these quarters have been accumulating. So let's take it step by step.
Sure. Mark, one word on the industrial metals before we let you go. While we, of course, have seen most of them trading off their lows, we haven't been able to maintain the one-side direction. Is there anything that you would want to pick up in the industrial metal, base metal space also?
Well, yes. Actually, as we have been discussing before, I have maintained the same position in looking southward for gold price. I still keep that position, because we can see that the central banks are going to have a tightening from time to time much faster than expected. So at this moment, even though there are uncertainties, trade war concerns, all these things, it didn't have much.
All right, so not too much of an impact, especially coming from that. More sentimental than on ground is what Mark says.